everyone, and welcome to the Hardcore Finance Podcast. Today is a very special episode for us. Coinbase is going to IPO, or not exactly IPO, it's going to do a direct public offering tomorrow. And it's been very, very frothy on the secondary markets. So, and also in the crypto industry, I would say people are kind of on the fence. Some people are very optimistic, some people are very pessimistic. So we thought it's a very good opportunity for us to discuss the Coinbase IPO. Specifically, would we invest in it? Would we invest in it instead of Bitcoin? Would we invest in it instead of the general indexes that, by the way, have been performing really, really well for us? I hope you guys are listening to our advice, which is not financial advice. But yeah, just today everything hit kind of all-time high. So very excited to chat with you, Alex, about it. Alex, how are you doing today?
I'm good. Exciting day, like you said. Let's talk about Coinbase. I'm super excited, not only because you and I are both in the space, and we've been in the space for a while. I've been talking about crypto and Bitcoin, and look, whether you're a Bitcoin maximalist or a crypto maximalist, whether you believe in altcoins or not, the Coinbase IPO is something to behold. I mean, look, it's rumored to be valued at 100 billion. At 100 billion, it's bigger than the NYSE and Nasdaq combined. Just that's insane. And it's bigger than Goldman Sachs, which is arguably the most prestigious investment bank in the world. And so let's talk a little bit about what we believe. Do we believe this is going to be another Google and Facebook that people are also yelling, hey, this is so overvalued when they were listing, and clearly they weren't? Or is it going to fizzle? So tell me, Shimon, what do you believe? Do you believe is this a bull case, bear case? What are these cases for you?
Yeah, so first of all, I want to separate the conversation about the impact that the IPO will have on the market, both on the crypto market as well as on the financial markets. That's a separate question. There, I can tell you straight ahead, it's an amazing thing. I think it's a very, very good thing for Bitcoin. It's a very good thing for the financial markets. It's a very good thing for the integration of the two. Like in several past episodes, we've been talking about how the exposure to Bitcoin will be a growing percent of the indexes that we're investing in. And so that's good, in my opinion. Bitcoin hit an all-time high today. It wouldn't surprise me that it's as people expect the Coinbase IPO. Now, about investing in the specific stock of Coinbase, I am actually exactly on the fence. And I hope that this conversation will help me decide whether to invest in it or not. But I can start by giving you my bull case. People who are very bullish on Coinbase. The bull case goes like this. Pretty much the high-level executive summary is that Coinbase is better than banks at being a bank. It has better engineers. It has access to this network of crypto, which allows it to do things that traditional banks cannot do. Like, for example, pay higher interest rates. Like we see that today on a stable coin, you can get like 6%, 7%. On some other coins, you can get 15%, coins that are not stable. So imagine Coinbase competing with Wells Fargo and with like Chase and with Citibank. Those are very outdated companies. Their tech is always behind. They're never the first to adopt any new technology. Everything sucks there. Like the interface, like you want to send a wire, you have to wait for a couple of days. You basically everything is difficult. So I'm just thinking my bull case is that Coinbase becomes a bank, and it should very easily be able to take share from traditional banks. Then on the exchange side, which is what currently generates a lot of its revenues, you could make the case that they'll just keep making good money as the crypto market grows, which both you and I believe that it will continue to grow. It will just take a cut. And the third case is an investment case. So basically, we know that there's different, whether it's hedge funds, whether it's people seeking exposure to crypto. Currently, there's no easy way to get exposure to crypto. You could buy Bitcoin, but that's hard and not always possible. You could buy GBTC, but that has a negative premium. Nobody knows where it's going to go. You can buy MicroStrategy, but then it's not exactly a pure exposure to crypto, and it's only Bitcoin. So it's not, there's not an easy way. And of course, you can buy all these like index funds that index different crypto things, but then you pay 20%, which is just ridiculous. Like, why would you pay 20% fees if you just want exposure to all of the crypto market cap? So those are my 3 bull cases. I think they have a very good likelihood of playing out. I do have some bear cases, but like if I had to summarize like why I'm optimistic on the stock doing well, those would be the 3 main reasons. What do you think of that? And do you have any other reasons that make you optimistic?
Yeah, so I think those are great. I do like the ultimate bull case, which is, Bitcoin is going to eat the banks. What we talked about is you had a great
I
example.
mean, Coinbase is going to eat the banks?
Coinbase is going to eat the banks.
Bitcoin is also going to eat the banks, but then it'll take like
That's true. That's true. Coinbase is going to eat the banks. We had a good example of, hey, if you're a retail investor and you want to come and open up a checking or savings account, and you can easily come to Coinbase instead of a Chase or Wells Fargo and others. And let's get into why. I'm gonna park this for our listeners, but just as a teaser, both of us believe that actually Coinbase will be able to give and offer better yields and better performance and better promotions to get people to come to the bank. So instead of, hey, open up an account, you got $300, you could say open up an account and get $1,000. Why? Because they'll be able to give you better yields on your savings and lend out your money at a better rate. Let's get to that, right? Because I think this is the meat. We're going to dive deep into the meat to really explore this theme. Because to me,
why do you think the yields will be higher? Why can't Wells Fargo just look at Coinbase and say, "Oh, I'm offering the same"?
So let's get to that. Let's give our bear cases, because I think this discussion for our listeners is going to be the bulk of this conversation. This is very interesting. This is really going 3 or 4 levels deep into the strategy of Coinbase.
Okay, you don't want to go deep on the bull case before we go to the bear, or you want?
I want to come back to this part of the bull case. The other part of the bull case for me is there's mania, obviously, for crypto in the market now, and so there's a lot of hype, and so people will come into Coinbase. So there's other 2 aspects you touch upon that I want to mention, and we don't have to go too deep on them, but there are 2 things very unique to the crypto markets, which don't exist in regular markets, which Coinbase captures right now. One of them is the trust factor, or I call it the trust premium. And what does that mean? With crypto, there's no bank or number or customer service to call if you lose your crypto. And there are many scamming companies out there. It just exists. And Coinbase has been around for a while. They are a public company, so there's going to be implicit trust inherent there. And they're able to command the premium. They charge 250 basis points, or 2.5% per trade. That's highway robbery. It's crazy, right? Where you have like a Schwab or an E-Trade, when you're trading regular stocks, they charge you $7 per transaction, whether you buy $50 worth or $5 million worth. The point is that the percentages are insane. It's very costly to do business on Coinbase. Why? Because you trust the company and you trust customer service. And so they're going to be able to go out, raise a ton of capital. Now, this trust premium is it's going to shrink over time. It's going to come down as more and more companies get into the market, as the space matures, as other people go public. But for now, it won't. There's going to be no attrition there. And so the trust premium is huge. It's huge. The first listed company, first major company, and they're going to see a lot of retail and institutionals come to them. That's point number 1. Point number 2 is that.
But wait, can I just ask you on this?
Man, I was on a roll. I'm kidding. Go ahead. Ask me about point number 1.
So when you say trust, do you mean that they will be more trustworthy than a traditional bank, or will they be more trustworthy than other exchanges?
Other exchanges. In the beginning, it's vis-a-vis other exchanges.
Yeah.
Later on, as
that's the moat that they have to protect the fees that they're charging on the trading, you're saying these fees they have pricing power there because of the brand reputation
Precisely.
and the trust. Okay.
Precisely. I think it's a good clarification point. This market is going to evolve in many steps. Step number one is going to get retail and institutionals into crypto, other retail who are dabbling. People who are buying GBTC right now, actually, and not buying Bitcoin because they are worried about custody. They're worried about, well, how do I do this thing, or where do I store it, and so on. Coinbase is going to go public. They're going to come into Coinbase. Okay. Then once they establish that trust, then they're going to go into the whole banking side, right? And then they're going to, because they will have trust momentum, they're going to start taking share from regular brick and mortar banks. And there's a great case study of this. And the case study is online banks. Do you remember what in the early 2000s, when the first online banks came out, you were like, whoa, am I going to send money to a place where there's no, I can't like walk into a store? Am I really going to do it? Who's going to hold my banking checking account? Now, online banking is the de facto, right? A brick and mortar banking is like, oh shit, I got to go into a branch, do whatever. Mm-hmm. So the paradigm completely flipped. But in the beginning, it was like, oh, I don't know, I'm not comfortable with it. So Coinbase, once people get comfortable with Coinbase, it's going to start eating traditional banks. Not in year one, likely in year 3, 4, 5, really will start getting momentum. So let me give you bull case number 2, because I really want to talk about Coinbase eating banking, and we'll go on deep into that. The second part that you didn't mention is you touched upon this ETFs. So right now, if I'm an institutional grade investor and I want to get exposure to crypto, I can buy GBTC, the Grayscale Bitcoin Trust, which now has a flipped premium, but let's not talk about that. I can buy MicroStrategy, like you mentioned, which is a leveraged Bitcoin play, pure Bitcoin play. But if I want an ETF in the US, I don't have one. Coinbase is going to be your de facto ETF of all of crypto, the whole crypto basket ETF, with an inclination towards volume, right? Not price appreciation alone, volume appreciation, which actually I think when the market pops, and it will pop at some point, we'll have a market break. Coinbase will feel it, but not as much, because the volume will still be there of people trading and selling. Okay. And so not only will it be an ETF itself, other ETFs like ARK, forward-thinking ETFs, or in general, other ETFs that want to get access to this or exposure here, they cannot, will buy Coinbase as indirect exposure into crypto, right? The like pension funds or others, they can't buy by their decree, by the charter, they cannot buy Bitcoin directly. They will be able to buy stock or a public company, which is a pure play crypto ETF basket. So those are my 2.
Mm-hmm. Yeah, I agree with those 2. And so we're saying we don't want to dive deep into those.
Let's do bear, and let's come back to bull, because I think we're going to talk about bull a lot more. Let's just touch upon bear really quickly. Check it off the list.
Talk about bear a lot more because it's very interesting. But in any case, okay, my bear case, I've worked at many exchanges in my life. I've worked at crypto exchanges. I've worked at Forex exchanges. The main reason why the New York Stock Exchange, for example, or the CME is a valuable company.
What's the CME?
The Chicago Mercantile Exchange, where they trade all the futures. The reason why they're valuable is because they have almost a monopoly. So if you want to list a company today, an IPO, you can't list it in like a gajillion exchanges. Like you could. There's some companies, for example, that are listed both in Israel, Tel Aviv Stock Exchange, and on the NASDAQ. But the volumes are like orders of magnitude. Like NASDAQ gets like 99% of the volume, and like Israel gets 1%. So basically, you have the liquidity as an exchange. The reason why crypto is very different is because it's fungible assets. So you can basically buy Bitcoin anywhere, and it's the same Bitcoin, right? It's not like, it's like a stock, but only nobody can prevent anyone from starting a crypto exchange. And then what you can do, it's a trivial thing to access the liquidity of all exchanges. Like you can literally just ping all exchanges by API, get their latest price, you choose the price where you want to execute, and just execute. So in a sense, Coinbase has no pricing power over the very long run. So if it charges 2% now, and for example, exchanges like Kraken or OKEX or OKCoin, they charge 0.1%. For now, that's sustainable. But the question is, will that be sustainable long term? I mean, remember when cell phone minutes were expensive? Cell phone minutes are not expensive anymore. In fact, it's free, right? So I wouldn't, and Robinhood actually is doing that. Robinhood lets you trade Bitcoin for free. Now, yes, you pay through spreads and stuff, but my point is, you basically have to, it's hard to justify the pricing power when all your revenue is made by just fees, just because those fees will be arbitraged away. Then we spoke about higher interest rates. One may ask, okay, but like, could the government regulate this and say, look, you're not allowed to give a high interest rate, right? They did this to credit cards. They did this to payday loans, you know?
Yeah. So I agree with all your bear cases. I don't think I have anything to add on the bear case. In fact, I think for me, the biggest thing is, I go back to this price premium or trust premium. It's going to erode over time. There's no way, mark our words, that Coinbase will be able to command a 2% per trade rate over the long term. No way. So the question is, and as other exchanges come on board and become, it doesn't really matter for if you're just an exchange, whether you're public or not, the access to capital, as long as there's liquidity in the back, I don't think it really matters. And you can afford to acquire users. So as people trust other exchanges like a Kraken or Gemini or eToro or OKCoin or whoever.
Is a completely different, they're a second tier one, so they execute trades on other exchanges. But yeah, if you look at the first tier exchanges, you basically, it's really hard to justify paying 2% when you could pay 0.1% on OKCoin. And in fact, that's, for example, OKCoin has a lot of hedge funds that use it just because they just shop around. And so retail users, they don't shop around, they just go and do this thing. But the question is, how long can it last? Another thing that I wanted to say, that it's a little bit of an interaction between the bull case and the bear case, is like we said that traditional banks cannot do what Coinbase is doing because they don't have the engineering know-how and so forth. But what if you have like a layer of, for example, something like Plaid, a company like Plaid could very easily plug in to the Bitcoin network, and then suddenly all the banks can get access to the Bitcoin network without having to develop anything themselves. So that could also erode Coinbase's pricing power. Is like, if you get a third-party company that can just help a bank plug into the Bitcoin network, and then that's it. If the bank doesn't have to do it, suddenly they can offer everything that Coinbase is offering. They can offer 6% yields. They can offer like exposure and all of these things that we mentioned, hedge funds, choosing Coinbase. You could make the case that now they have the advantage, but like once like Chase, I mean, for example, who's the best retail bank? I don't know, Chase, JP Morgan, whatever. So
yeah,
like,
from a tech perspective, Capital One, by far.
Capital One. Okay, so if Capital One just like offers exactly the same tech because it's open source, this is the first time where you have an open source network. It's permissionless, so nobody can stop Capital One from plugging into the network. There's nothing proprietary that Coinbase holds. So then the question becomes, okay, is this just a marketing play? And then, yeah, maybe, you buy Nike because they spend a lot of money on advertising versus like a generic sports shoe. But like, is Nike a company that I want to own? I'm not sure. So that's their case.
Yeah. So look, I agree with that. Although I'll say, other than Capital One, and I've, in my previous life at both Microsoft and BCG, have worked a little bit with some of these banks. Their legacy, their finance systems are just atrocious. I mean, it's just a hodgepodge patch, quilt of IT stack and infrastructure, and it's ugly. And they're not going to be able to change really quickly. Again, Capital One, to their credit, is pretty good. Maybe JP Morgan.
Change, or do you just add Bitcoin to it, right? So like, imagine when you say send money, you click on like send money, and you can choose like Wire or Bitcoin. Wire, it's like 24 hours. Bitcoin, 1 hour. That's it.
Yeah, for sure.
Legacy system.
For sure. So let's. So look, we agree on the bear case. Let's go to the bull, because I think, or unless you want to go deeper on the bear.
No. Let's go deep now in bull topics.
Because
I'm telling you, I'm really on the fence. I'm thinking as we're discussing.
Yeah, I'm on the fence too, but I'm leaning towards yes. So here's my bull, right? I do think they're going to be able to come back and start offering. Let's talk about the offering higher interest rates, right? So what's happening now when you're able to kind of lend against crypto, and so this assumes that Coinbase needs to stock up crypto on their balance sheet because they're not doing that right now. They're not just stocking up Bitcoin and other assets, but you have Celsius.
Another bull case that we didn't discuss. I'm
Yeah,
just opening brackets, which is like Coinbase can now do what MicroStrategy is doing, which is like raise money in the public markets and invest it like in crypto.
they could, but it's kind of funny to me why they
They're not
haven't.
doing it for now. Yeah, they're very. First of all, Brian Armstrong is very much anti-Bitcoin. He never uses the word Bitcoin. He always says crypto. Maybe because they make more money on other tokens. It's weird because Bitcoin is most of their volume. But yeah, that's just a fact. They haven't done it.
Well, yeah, so it's an interesting fact, but here we are. But yeah. So, by the way, we should talk about CBDCs and if they're going to play a role into all of this. I'm not exactly sure if they will, but let's save that to the end. So let's talk about the premium, right? So when you have crypto assets on your balance sheet, both balances, balance sheet and assets and liabilities, um, there's been such a demand for leveraging and borrowing that you're able to offer better rates to people, right? To get their crypto deposited and hold that crypto. This is why, when you and I are kind of working with the state of Illinois, and we always preach that crypto lending is the game changer here, really lending against crypto. And so you have like Celsius network, right? And BlockFi. They're offering 3% rates on savings, easy, if not 6% on Nexo. I think it's you told me about Nexo today. I haven't never used them, but when you're offering 3 to 6% on your savings account, right? Which Coinbase, I can deposit fiat. Coinbase can quickly turn it around, right? And move it into Bitcoin or whatever and lend it out because they're going to be the middleman in the middle of this network. The volume in which they lend it out, they're able to offer 3 to 6% versus 0.5%, if that I get at a retail bank right now for my savings account, right? Lend it out at incredible rates. And you actually said this brilliantly. You said, hey, instead of $300 or $600 to open up an account, they can offer $3,000, and then the race is off, right? Then the race is off.
But the question is, okay, so let me argue with that. Why can't the traditional banks offer the same thing? I mean, those networks are open. They're open source.
Which, the crypto networks?
Yeah, like anything.
Yeah, they can. They theoretically
traditional banks can offer.
They should be, but they're shit scared of this stuff because I don't know, it threatens them. They don't understand it. They're dabbling in it. Like people like Fidelity that are actually quite forward and quite, they're embracing change, and to their credit, have the guts to bet, a legacy business and see the future, are going to be able to do well. Like Fidelity is another big competitor, for example, to Coinbase that I could see really stepping in. But look at Fidelity; it's still only to institutionals, right? And to
the problem with Fidelity, I wouldn't say it's competing with Coinbase because
not now can, because they're forward thinking, right?
Definitely.
But everyone else is like
another good point that you raise, which is like, are there new entrants to the space that could compete with Coinbase and erode away their premiums, right? So like, for example, OKCoin could do the same thing, right? Kraken could do the same thing.
So once you're able to charter a bank, right? Again, this is why we've been pushing this whole, working on the legislation in Illinois. Once you're able to be chartered as a real bank, then it brings so much value to consumers. So much value to consumers on top of instant settlements. Instead of wiring and waiting 3 or 4 days for this stuff to clear, instant settlement, ability to actually have hold custody of people's wealth and hold it, right? The ability of someone that's major to assess counterparty risk. What does that mean? When you borrow someone's money, so a consumer, you deposit money into a bank, right? For the bank, that's a liability because they're paying you interest. They take that and turn it into an asset. So they lend it out. So, but when they lend it out, they have to assess counterparty risk. They have to assess whether the person they're lending to or the institution they're lending to is creditworthy. And sure, some won't pay it back. Most will. This is the whole, risk assessment of a typical bank. But assuming that the institution that you're lending to is credible and can do that well, there's going to be so much new financial competition to traditional banks and to Coinbase, actually. But this stuff doesn't exist yet, right? And even if it did, the legislation, once it comes, Coinbase is still in pole position. They have volume. So look, here's a great example of, and I want to turn it to you. Let me just give you one more example, right? With Coinbase, on your credit card or when you're funding your account, I forgot the amounts, but you can buy up to what, $10,000 or something like that in crypto. Every other exchange says, whoa, we have to verify you, right? And we have to let the funds come in. Why? Because of the volume Coinbase has. And that removal of the initial friction because of the volume and scale that they have, and they'll be able to multiply that in the public markets, is actually quite a value to the user.
Mm-hmm. Yeah, no, absolutely. I completely agree. So basically what I'm hearing you say is that they basically have a first mover advantage. And so basically the idea is that they're very good at what they do and they're the first to market. So they'll be able to kind of always stay one step ahead of the competition. I could see that. Look, I now, as we were talking, I thought of another trade that might be genius, right? So you said something very good, which is like Coinbase is better than the traditional banks. Okay. Now we don't know, and we have to start kind of bringing it full circle, which is we said, A, do we want to invest in this IPO? B, if we want to invest in this IPO, where will we take the money from? Will we take the money from Bitcoin? Will we take the money from indexes, right? And so I'm not sure that I can bet on Coinbase outperforming the indexes long term, right? Not sure. But what I could be sure is that they'll outperform the banks. And so that could be a very interesting trade, which is a long short strategy where you go long Coinbase and short an ETF that covers banks, like retail banks. And that's a pretty safe bet to me because like it sounds like a safe bet. It's like we don't care if the stock market goes up or down, but we know that if the stock market goes down, the traditional banks will go down more than Coinbase. If the stock market goes up, Coinbase will go up more than the traditional banks. And so then you can like leverage 10x on this long short. And that could be very interesting. And if you remember, you and I were discussing this when COVID hit to do like a long short of NASDAQ versus S&P. We ended up not doing it. But if we would have done that, it would have been a fantastic trade. So maybe that's the trade. Long Coinbase, short the banks.
So explain that trade a little to our listeners because I love it. I actually really like it. So how would we execute that trade? How would that look like?
Yeah, so there's many ways to execute this trade. The idea is you go long one asset and short another. And the bet there is that the asset that you went long would outperform the asset that you went short. And it will outperform it on the way up. It will outperform it on the way down. So it will go down less than the other one, and it will go up more than the other one. So you can do this, for example, with options, with call and put options. You can do this with like just like buying Coinbase stock and buying an ETF that's short the banks. You have inverse ETFs for the banks. You can do it with, I don't know if there's futures for Coinbase stocks, but basically there's many ways to get long exposure and short exposure. I think what I'm going to do it is I'm going to do it with options just because it's very easy to get leverage on options. So it's like, it's kind of cheap. The problem with options is that you have to set a date at which like the options expire. So it's like, you know, what happens if they go sideways for a very long time and then you kind of lose money. ETFs, it's very clean, but then it's expensive to get leverage and it's risky. No, it's actually not very risky. It's just expensive. Like the leverage costs like 1%. But do you see any reason for Coinbase to not outperform a basket of the traditional banks? I really can't think of good reasons.
Yeah, look, we're making a leap and assuming that Coinbase will become a bank, which is the natural progression for them.
100% sure. 100% sure. If Coinbase doesn't become a bank like 5 years from now, something went terribly wrong. Like they got hacked or something. In my opinion. This is just my opinion, right? It's not financial advice. I don't know if it'll happen. I mean, I don't have any knowledge of the future, but like if I'm sitting on the Coinbase board, and don't forget, Coinbase board is like Andreessen Horowitz, all of the like top VCs, they're going to push for the right direction, in their opinion.
Yeah. Look, I also I believe they're going to be bank. Yeah, I love the strategy. I mean, look, you're much more well versed, to be fair, in more exotic. It's kind of funny. I pick stocks. You do index funds, but then you go into options and some of the exotics. You bookend me. I'm in the middle, right? You bookend me in terms of how you trade. So, but on premise, I really like the long short strategy. Now, I think it gives you less exposure to a pure Coinbase upside, right? Because you're muted by the short position of the banks. So,
but you can make up for it with leverage.
Yeah, you can make up for leverage.
So like I mean, leverage, you get much less exposure, but like you can lever 10x because like if the market falls, you can still make money.
Yeah, I'm trying to rack my brain. I mean, you kind of said this live, and I'm trying to think whether there's anything I disagree with this. I think I agree. I mean, it's a pretty solid strategy. Let's do it. How much? So the question is, at least for me, I'm gonna have to go in on margin. I'm pretty maxed out when for our listeners, Shimon and I are both very long on growth stocks. And over the last, since February to March, when growth took a huge hit, I mean, I leveraged my way back into the market.
What do you mean it took a huge hit? NASDAQ is at an all-time high last I checked.
No, sure. But in February, March, it was down like 10%. So when it was down 10%, especially individual stocks, like I went in.
My wish to you is that your definition of a huge hit is 10%. If I could make one wish for you.
I appreciate it. This is what great friends are for. Maybe the worst thing that happens to you is 10%. But the point is, so on my individual stocks, it was more than 10%. Tesla is down by 50 or so. MicroStrategy was down by 50. So I was like, you know what? I'm going to buy this dip. And the point is that I leveraged in, and now I'm going to have to find some way of getting more money, or I margined in, I should say. I'll have to figure out where to get more money to do this trade. What I'm racking my brain around about, and I was so sure about this until today, is that I thought Coinbase would take MicroStrategy's upside. Because for the people who couldn't get exposure to crypto, bought MicroStrategy, and now they can do a much deeper crypto basket with Coinbase.
It's a different basket. I wouldn't say it's deeper. So MicroStrategy is leveraged Bitcoin. Coinbase is unleveraged many crypto assets. So it's not exactly apples to apples. It's very, very different.
Exactly. It's different. But I thought it would take some wind out of MicroStrategy's sales, and today MicroStrategy is up 19%. I mean, I just couldn't believe
what happened today. Can we talk about another very, very exciting thing that for some reason nobody's talking about? So Binance listed Tesla in a tokenized way. And it's the first time that Tesla can trade 24/7. In the history of humanity. Like they did something that nobody, now, maybe they're doing so many things that regulators don't like. But like now you can buy Tesla stock in the middle of the night or on a Sunday. It's pretty cool. Now you have price discovery, and now this affects the price of Tesla on the traditional markets. Because hedge funds can arbitrage that stuff. It's not they don't promise to deliver your Tesla stock. They just promise to deliver you synthetic exposure to the Tesla stock, but still it's price discovery, right? Like if suddenly it goes up overnight, the opening on the exchange will be very different than if the overnight trade didn't happen.
Sure, depending on volumes. Now look, Binance is a very sore subject for me. You know it, I know it.
Well, no, I'm just talking about the innovation in the space in general. So if Binance did it like a gajillion other, like FTX will do it, like there's.
I just hate Binance because I think it's a scam, and I mean, for me personally, it stole my money. So, but we don't need to necessarily talk about that. But Binance did. So
you want to say allegedly, so they don't.
Allegedly, Binance allegedly stole my money from me, and they are allegedly a scam. Alleged by me. But Well, I think 3 months and probably 100 tickets later, and things being mysteriously closed, the allegation is pretty strong. Long story short, it's a very interesting thing that they did. Now, the way it works is, for it's a synthetic Tesla stock. So if for every dollar that goes into buying this synthetic Tesla is collected and then it goes in the market and buys actual Tesla, so that the actual stock will theoretically mirror the synthetic. Yeah, I think a lot of the stocks. What's going to be interesting is over time. This is why I think it's going to be very hard to ban Bitcoin and crypto. The people just move to this whole new universe in this world, on-chain world, right? And so you can synthetically mirror stocks as long as you have an on and off ramp somewhere in some country. You'll be able to create a linkage between the real world and the legacy world and in crypto. And this is, well, it's huge. It's a nice little reward for Tesla, I think, because a lot of the crypto people are fanboys of Tesla. So it's like, okay, Tesla, you bought 1.5 billion of Bitcoin. Here you go, Elon. You're shilling Dogecoin. Here you go, Elon. Here's a synthetic Tesla stock for you. I mean, we'll see. Let's see how Tesla moves. Let's see what's Tesla? Let's see how many days it's gonna be up. Today, I think it was up.
I don't even know what the price is. I don't follow it. But let me ask you another question though, because we kind of have like 5 more minutes to wrap up. So,
dude, Tesla's up 9% today.
Good.
Yeah, good.
Let me ask you something. It's good because I'm exposed to the index that Tesla's a part of. Let me ask you, what do you think will perform better, Bitcoin or Coinbase shares?
It depends on the time horizon. Between now and midsummer, Coinbase shares.
Very interesting. Okay.
By far, I think. By far.
And you're not bothered that by the fact that like a lot of VCs and Coinbase employees are going to dump the stock on retail?
Yeah, I don't think so. I was thinking about that because the broader market's so much bigger. How much exposure do you think VCs might not? But I don't know. Let's say dump half.
Probably, yeah. Employees are not a huge factor, but like VCs, I mean, I don't know. It's
if VCs dump, they might dump. This is actually maybe a case for not buying it tomorrow. Because tomorrow everybody's expecting a price run up, right? So if I'm an employee VC, I'm not selling tomorrow. I'm going to sell maybe like Tuesday or Wednesday or Thursday. Let the price run up a little bit, right? And then bring it back down.
Yeah.
And sell then.
People say that, yeah, it's probably good to stay away from it in the first couple of days just because it's going to be very frothy. But again, if we do this long short strategy, I'm like, the more I'm thinking about it, the more I like it, because like I don't know if Coinbase will outperform Bitcoin. I'm very bullish on them eating up market share from the banks, and then the question becomes like, will market share of the banks, is that valuable versus Bitcoin? I don't think so. Like I think Bitcoin is going to eat all the banks. To your point, it's just going to take like 20 or 30 years to do that. But with this long short strategy, you kind of get the best of both worlds, right? Like you get the upside of Bitcoin, you get the difference between Coinbase and the banks, and you short the banks, which is nice.
Let's do it. I'm in. I'm gonna need your guidance a little bit on how to actually structure this. I understand implicitly how to structure it, but I've never actually executed a long short strategy myself. So Sensei, I will learn from you about how to execute this thing.
Yeah, no problem. And last question is, what do you think will be the implication on the broader markets and on the broader crypto?
Oh, broader crypto, hugely bullish, I think, in the long run, right? Who knows what's going to happen? There are some signs in the Bitcoin market specifically that the market structure isn't as strong as it should be or seems like. But over the medium, intermediate to long term, hugely bullish, hugely bullish. It's an on-ramp, a massive on-ramp for people. And as more and more people, as more and more people get used to this, they're going to buy in. They're used to Coinbase. I've had dozens of people today literally call me, oh, Coinbase is coming up. Should I buy? Yes, you should have fucking bought, excuse me, family friendly show. You should have freaking bought months ago when I was telling you to buy, not now. But so Coinbase, this actually might be a little bit of a local top in the next kind of couple of weeks, like pops a little bit. I still stand by the fact that we're going to have a double top year this year, which will be ultimately hugely bullish for Bitcoin.
Double
Hugely.
top at what price? By the
Who
way, for our
knows?
listeners, I think this is pure voodoo. I really don't believe in technical analysis, but I'm always amused and enlightened by Alex's views on timing the market.
I don't know about timing, but I do think we'll see some sort of, anyway, the point is, what do you think? Do you think it's going to be bullish or bearish?
Well, I think, yeah, for sure for crypto is going to be bullish, but I'm actually very bullish on the market itself, like NASDAQ, because the, people wrote there's category defining IPOs, right? So the IPO of Microsoft, then the IPO of Netscape, then the IPO of Google, then Facebook, and now Coinbase. I mean, it's really kind of category defining things that give a huge boost to the market in a huge ecosystem too. Like I'm just thinking of like all these like employees that will become very wealthy now from the IPO, and then they'll start their own startups. Like it's great for the ecosystem. I'm thinking just like traditional finance. The issue I have with the Federal Reserve is like they are suppressing interest rates, and that suppression of interest rates, I think, is just very, very bad for growth, as we have discussed in many episodes. And the main reason why it's bad for growth is because it makes it profitable to invest in projects that are, that wouldn't have been profitable at like a 5% interest rate because of the, discount cash flow model where you discount things by the interest rate. And so now the more of the financial companies get integrated into this new financial system that has higher interest rates, they'll be able to invest in better projects. They'll be able to bring better yields. And this is the first time that we've had innovation in finance, just like you said in your speech with the House of Representatives of Illinois. This has been the most important monetary invention since the invention of coins. And before coins were invented, it was very, very hard because like it was hard to verify the value that you're given, and people could manipulate it, and people could clip coins and do a bunch of stuff. That coins solved that problem. So I think just like being able to participate in this monetary network, this IPO is going to be game changing, and it will set a very high bar for other IPOs and a very high bar for, when VCs now invest, it will be like, okay, can you outperform Coinbase? Can you outperform Bitcoin? That will be the bar for like new ventures. And I think that's a very good thing. So it will be very good for the markets, even if the markets are not financial, for any startup, for any IPO.
So you heard it here first, folks. Long, short, that's what we're going to do. We'll let you know how it works. I think we're both a little bit leaning towards more bullish on Coinbase. And let's see. I mean, we'll publish this tomorrow morning.
I wouldn't say I'm bullish on Coinbase. I would say I'm bullish on Coinbase versus the banks, because I can totally see their margins being eroded away. But that's okay, because like the banks will suffer even more.
I'm bullish on Coinbase, maybe a little bit more than you, but we'll publish this tonight. We'll edit this, publish it. We'll be up there for people for tomorrow, and good luck, everyone. Good luck. This is regardless. I think it's a dawn of a new era, right? And it's really bringing crypto into the mainstream, unlike it has been before, and that's just very, very exciting. And so, kudos to the team at Coinbase. Kudos to Brian Armstrong, and kudos to the employees. They deserve it. They deserve the amounts of money that's going to be dropped upon them, which is just like insane to just comprehend. $100 billion. It's wow.
Yeah, it's the dawn of a new era, and don't try to day trade the market in the first couple of days. Like, don't forget, Facebook went down after its IPO initially, and then it went fantastically up. So, please be careful. This is not financial advice, but both Alex and I are very excited about the impact that this will have on the space, and specifically on Bitcoin.
Awesome. Great talking to you as always.
Great talking to you, and I'll talk to you soon. And guys, please leave us a review. Those things really help. So if you can just write a review, whether it's good or bad, doesn't matter. Just write what you think about our podcast on Apple Podcasts, on Spotify, wherever you listen to us, and a rating. That would be highly appreciated.
Perfect. We'll talk to you soon.
Talk to you soon, Alex. Bye.
Bye-bye.